Yeah, I wanted to spend a little bit of time here just talking about the investment game that we're going to be playing. So, again, this is information in general that we'll get and we'll find as we go through the class. But I did want to make sure that we're okay with understanding some of the basics before we get started. So let's take a look. How do you determine what an investment objective is? Well, there are really three kinds of objectives. There's capital preservation. Essentially, you want to avoid any kind of losses. Income generation is self-explanatory. You want to try to find investments that are going to provide a maximum amount of interest and or dividends. Now, most of the time, people search for a mixed kind of process, right? Capital appreciation obviously is really looking for undervalued assets and really trying to take a little bit more risk. So this particular game is geared towards capital appreciation. Don't think about capital preservation. Don't think about avoiding losses. You want to take risks. The goal of this game is to experiment. So don't worry about losing money. It ain't money. So it's not real. What kind of strategies can you take? Well, there are basically two ways we can look at investing. You can look at investing as a value proposition or a growth proposition. So you can look at finding stocks with low values that are currently underpriced, or you can try to find investments that have growth potential. We can also look at capitalization, and we'll talk about all of these as we go through the course. But we need to decide how you're going to analyze, right? So let's take each one of these styles as we go through. A value style, you're going to try to find undervalued stocks. You're going to try to find things that for some reason the investing public has not figured out the correct price. You're trying to find things that are mispriced. Growth style basically looks at things where you think it's in an investment or the company is in a strategy in which price appreciation is right there. It's going to be rapid and it's going to grow very quickly. So the price is currently correct. You're looking for price appreciation because of something going on either in the company or in the industry. When you think about size, we can look at small companies, small caps companies, typically have a market value of less than $1 billion. Large caps, greater than $4 or $5 billion. So again, where do you find most of the growth potential? Most growth stocks are going to be in small and medium cap, and most of the value stocks are going to be in the mid cap and the large cap stocks. So that's where we're going to find these different kinds of investments. How you analyze is also kind of important. Top down means you look at the economy. You try to figure out where the economy is going to go. Once you understand or you estimate the economy that you expect, we try to find industries within that economic forecast that are going to perform the best. Once you know what industries are best, we then look at the companies within those industries, and it just makes sense. The best companies performance-wise are going to be in the best industries performance-wise. Now, bottom-up analysis is the way people typically do it a little bit more often than not, is they're going to look at good companies that they know and they understand, and then go the other way to try to figure out how they're going to perform, these individual companies will perform moving forward with different types of industry conditions. So in this case, you really need to do a combination of both to try to understand how the game is going to be played. There are screening tools that we've talked about. They are basically free. So if one asks you for money, then don't participate. right? You don't want to spend money on these, but these are free services. Now, sometimes they'll offer premium aspects. So, you can do this, this, and this, but if you want to do another thing, it costs money. Don't spend any more money on these on this game. We're already going to be participating. You'll have things to look at, and we'll do a couple of these in class so we understand how you use a screening tool. Next, we're going to talk just a little bit about special kinds of trades. Now, we'll talk about these in class, but a margin trade is when you borrow. Why would you want to borrow to purchase securities? Sorry about that. Why would you want to purchase or borrow in order to purchase securities? Well, you can then buy more securities. Currently, as it looks down here, the initial equity is 50%. So you only have to pay half price to buy stocks. So if you have $1,000, you can really buy $2,000 worth of stocks. And since you've invested less money, as the stocks go up in value, you earn a higher rate of return because you've invested more. Now, what's the downside? You obviously have to pay interest, and you obviously have to pay back the money. In the end, what does this do? It does make things a little riskier, right? Every time you borrow money, it adds an additional layer of risk to the investment strategy. Now, the last thing here is something called short selling. And again, we will talk about this in class if we haven't already. And basically, short selling is when you think the stock price is going to go down. So how can you make money if the price goes down? Well, the typical process of investing is you buy and then you sell. Well, what we're going to do in a short sell is you're going to sell today, but you don't own the security, so you're going to have to borrow it from the broker. So you borrow the shares and you sell them. So now you have the money. What can you do with the money once you have it? You can invest it. You can do whatever you want to do with it. It's yours. But now you owe these securities back to the brokerage firm. So later, if you were correct and the stock price falls, you'll go back and you'll buy the stock at now the lower price and give the stock back to the brokerage firm. So it's the buy-sell arrangement, except it's done in the opposite order. Again, we'll talk about this, and I'm sure you'll be playing with this throughout the game as we move along.